What if I told you about a Nasdaq-listed tech stock trading for under $1 that just posted a staggering 1,362% revenue growth in a single year? A company that shocked Wall Street by turning its first-ever quarterly profit, holds over $116 million in working capital, and just raised its forward revenue guidance by an explosive 400%. Welcome back to the channel. Today we are doing a deep dive into one of the most fascinating and overlooked turnaround stories on the market right now. Datavault AI, trading under the ticker symbol DVLT. Currently trading with a market cap just under $400 million, this company is flying under the radar of mainstream retail investors. But with massive AI partnerships, institutional-grade acquisitions, and a foothold in the Web 3.0 data economy, the smart money is starting to aggressively pay attention. Is Datavault AI the ultimate multi-bagger setup for 2026? Let's break down the ultimate bull case. To understand the bull case, you first have to understand the massive pivot this company just executed. You might actually know this company by its former name, WiSA Technologies. Historically, WiSA was known for its wireless spatial audio technology used by brands like Klipsch and Bang and Olufsen. But in late 2024, management made a completely transformative move. They executed a $210 million asset purchase of Datavault Holdings, brought in tech veteran Nate Bradley as the new CEO, and in February 2025, officially rebranded the entire company to Datavault AI. Today, Datavault operates two powerhouse synergistic divisions: Acoustic Science and Data Science. The Acoustic Division still holds their heavily patented audio tech, boasting 63 patents worldwide, and recently showcased their Gen 2 software at CES 2026. But the real explosive growth engine is their new Data Science Division. Datavault is solving one of the most lucrative problems in the artificial intelligence era: data monetization. Through their information data exchange platform, they allow enterprises, sports leagues, and healthcare networks to securely value, tokenize, and monetize their proprietary data. Using blockchain tech and AI-driven agents, they aren't just storing data, they are turning raw information into a liquid, tradable asset class. Now, let's talk about the numbers, because this is where the Datavault bull case becomes undeniably strong. For years, the bear thesis on this stock was all about cash burn. But in March of 2026, management completely shattered that narrative. Datavault AI officially posted its first ever profitable quarter in company history. Let's look at the top line acceleration. In 2024, they did just $2.7 million in revenue. In full year 2025, they skyrocketed to $39.1 million. That is a 1,362% increase year over year. Even more impressive, their gross margins expanded from a weak 14% to a massive 78%. In the fourth quarter alone, they pulled in nearly $34 million in revenue with a GAAP operating profit of $4.2 million. And they are doing this with an absolute fortress of a balance sheet. The company now boasts roughly $116 million in working capital. Plus, as of the end of 2025, they held over $92 million in crypto assets. This means they have the massive cash runway required to aggressively acquire competitors and scale globally, without immediately diluting shareholders to keep the lights on. But what is actually driving this hypergrowth? It comes down to elite partnerships and aggressive mergers and acquisitions. First, the M&A strategy. Datavault recently signed a definitive agreement to acquire NYIAX, a blockchain-enabled exchange platform. By combining NYIAX's institutional-grade smart contracts with Datavault's tech, they are building the ultimate automated data trading infrastructure. Second is their massive entry into biotech. Datavault secured a partnership with Silex Holding Company to build a revolutionary biotech and scientific research exchange. They are using Datavault's tech to tokenize and monetize medical and genetic data globally, and they are tapping heavily into global sports and entertainment. They recently signed an agreement with the World Boxing Council to unlock event-driven monetization at scale, and even brought on NHL Hall of Famer Jeremy Roenick to lead their international name, image, and likeness exchange. But here is a catalyst you rarely see: direct crypto dividends. Datavault has been issuing event-driven digital collectibles, like the Dream Bowl meme coin, directly as a dividend drop to eligible DVLT shareholders. They are literally building an ecosystem that directly rewards the investor base. Forget centralized clouds. Datavault AI is quietly building the future with a massive nationwide edge node rollout. Partnering with IBM, they're deploying zero-trust, quantum-resilient micro data centers across 100 U.S. cities by the end of the year. By turning real-time data into secure, tradable digital assets at the edge, they're targeting up to $3 billion in annual revenue by 2027. This isn't just an upgrade, it's the ultimate infrastructure bull case. Retail isn't driving this breakout, it's the smart money. Institutional heavyweights like Vanguard, JP Morgan, and BlackRock are quietly building a massive floor under Datavault AI. Vanguard just increased its stake by nearly 3,000%, grabbing almost 12 million shares. This brings us to the ultimate catalyst: forward guidance and valuation. On their latest earnings call, management dropped an absolute bombshell. They reiterated their 2026 revenue guidance at a staggering $200 million. That represents roughly 400% year-over-year growth. If Datavault executes on this $200 million target, the current market valuation of under $400 million is absurdly cheap, trading at under 2 times forward sales. Compare that to the rest of the AI and software sector, and it looks like a deep value play. Wall Street analysts are taking note, with price targets currently sitting around $4 a share. If they hit that, we are talking about roughly 500% upside from current trading levels. Datavault AI has the cash, the proprietary patents, and the newly proven profitability to be a major disruptive force in 2026. But as always, this is not financial advice, and you must do your own due diligence. If you found this deep dive helpful, make sure to hit that like button, subscribe, and ring the bell for more stock market breakdowns.